So, as you can probably see in the description, the title, unfortunately, Chipotle does not franchise. If you want to get in on the action of Chipotle, it is a publicly traded company. You could buy the stock on the New York Stock Exchange, CMG is the ticker. But if you're looking to franchise and open up a Mexican food business, this video is for you. In today's video, we're going to go through a few franchise alternatives to Chipotle, 4 to be exact, that you can consider opening if you'd like to have a Mexican themed restaurant in the United States. But before we jump into the other franchises, the cost, profitability, and all that, let's just go through what makes Chipotle so interesting and why so many restaurants are emulating Chipotle's success. Going back to the humble beginnings of Chipotle, it started by Steve Ells, who was attending the Culinary Institute of America in Long Island. In 1993, Ells founded the first Chipotle location in Denver, Colorado, near the University of Denver, using an $85,000 loan from his father. Ellis and his father worked together, calculated that they needed about 107 burritos a day, basically selling 107 burritos a day to be profitable. After a month, the restaurant, this one single restaurant near the University of Denver, was clearing 1,000 burritos per day. That's a lot of burritos that they were selling from one location. So I'm sure Steve, his father, and friends and future business partners saw that he was on the success. As of now, 2020, they have 2,750 plus locations that are all company owned. And they have a few locations outside the United States, including in Canada, the UK, France, and Germany. Now, there's only 33 locations outside the United States. I'm cheering for Chipotle to conquer the world like McDonald's, Subway, and a lot of these big franchise brands have done in the past. And I hope to see Chipotle's all over the place. Before we jump into a few alternatives of Chipotle, I want to go through what the sales are like to Chipotle so we have a benchmark when we compare these other 4 franchise alternatives to Chipotle. Average unit volume for a Chipotle is $2.1 million. And if you were to open a Chipotle, it would probably cost about $1.4 million. The profit margin is very high in a Chipotle, low 20%, 21, 22%. So about 5.5 years to recoup your capital, which is very good for a quick service restaurant. And Chipotle, the publicly traded company, has done extremely well over the past few years, making net income in the millions of dollars, with 2021 making $652 million in net income, nearly doubling what they made in 2019. So they had really a minor impact in 2020, and they really continue to have high growth into 2021. The first franchise we're going to go through is Qdoba Mexican Eats, a fast casual Mexican themed restaurant. Qdoba offers wide variety menu options similar to Chipotle, where they have burritos, tacos, and quesadillas. They charge 5% royalty, which is pretty standard, and a 3% combined marketing. You can expect to pay between $250,000 and $800,000 for a Qdoba that's in a non-traditional location. So think airport, train station, college campus. And then about $500K to $1.1 million to open up a Qdoba in a traditional location. So think in an end cap, inline in a strip mall, even a single unit occupancy depending on the space. Based on our analysis, a Qdoba restaurant will take about 4 to 6 years to recover your initial investment, which isn't bad considering the other competition in the quick service restaurant space. The number 2 franchise that you could consider is Rusty Taco, an American-based chain founded in Atlanta, Georgia in 1962 by Rusty Fenton and his wife Denise Fenton. Currently, it's a subsidiary of Inspire Brands, and Inspire Brands is an umbrella company owned by Roark Capital, a $33 billion private equity fund also in Georgia. Part of the Inspire Brands portfolio includes Arby's, Buffalo Wild Wings, Sonic, Jimmy John's, Mr. Donuts, Dunkin' Donuts, Baskin Robbins. So you can see Rusty Taco is in pretty good hands in terms of brand recognition with the other franchise brands in the Inspire Brands portfolio. To be considered to open up a Rusty Taco franchise, you got to have at least $500K liquid capital, so essentially cash, stocks, bonds, and a net worth above $1 million. They charge 6% royalty and 2% marketing fee. Pretty standard. You're going to expect to pay $500,000 to $900,000 to open one. Right now, they're offering a pretty cool promotion where it's 0% royalty for the first 12 months, as well as additional royalty discounts up to the 3rd year. Based on our analysis, it would take you about 6 or 7 years to recoup your initial investment on a Rusty Tacos, as the average unit volume is about $1.1 million. and they spit out about 15% in terms of cash flow on that $1.1 million. The net unit growth has been pretty good for Rusty Taco at 88% over the past 3 years, so they grew quite a lot during the pandemic. Moe's Southwest Grill is also a big competitor of Chipotle, another concept that was founded in Atlanta, Georgia in 2000. Moe's is part of Focus Brands. Now, Focus Brands also include Slotsky's, Carvel, Cinnabon, McAllister's Deli, Jamba, Annie Ann's, and it's an umbrella company owned wholly by Rourke Capital, that $33 billion private equity giant in the franchising space. The median sales on a Moe's is $1 million. This is very comparable to other players in the space, other franchises, like I just mentioned Rusty Taco, but it's way below what Chipotle is doing. The initial investment out of a Moe's is about $800,000. So at a 15% profit margin, it will take you about 9 years to recoup your initial capital investment with a Moe's Southwest Grill. One issue with Moe's, they've had a lot of closures. So they closed over 50 locations in 2020, and they've had a failure rate of 15% over the past 3 years. That's over the average for all the franchises in our system over the past 3 years. And when it comes time to sell that Moe's, if you're just one location, it's going to be hard to get your money back. If you open up 10 locations, you could expect to make a nice profit when you sell your mini Moe's empire. But with just one Moe's Southwest Grill, it's going to be hard to recoup your capital. And the fourth Chipotle alternative is Taco Bell, now a subsidiary of Yum Brands. Taco Bell really made famous Mexican-themed food in the United States. Yum Brands also owns Pizza Hut, KFC. They have over 6,800 franchise stores in the United States and another 500 in international markets. Average unit volumes, $1.8 million. It costs about $2 million to open up a Taco Bell. Even with a 15% profit margin, it would take about 9 to 10 years to recoup your initial capital investment. Taco Bell has played around with a few different formats. The express model has largely been a failure with nearly 50% of the system closing over the past few years. So that's more than 200 units that have closed under the Taco Bell express model. Not something that they really highlight. So I don't know if I'd be a guinea pig in terms of the different models that Taco Bell rolls out. Maybe it's best for them to test it with the corporate locations. Probably don't want to be a guinea pig, especially if you're a new franchisee into the Taco Bell space. I hope you found this video informational. And if there's any other comments, just shoot me an email at patrick@vettedbiz.com and let us know how we can improve these type of videos and if there's any other businesses you'd like us to analyze.